Good evening, everyone, and welcome. Thank you for joining us for this exclusive webinar, the MidCapDiverse Smart Portfolio, AI-Powered Investing. I'm Hendoran Segal, Head of Product Marketing at BridgeWise. Tonight, we look at how AI is reshaping portfolio construction, why midcaps matter now, and take you inside MidCapDiverse, a portfolio built exclusively for eToro investors based on BridgeWise AI analysis. I'm joined by two fantastic speakers, Lale Akoner, Global Market Analyst at eToro, and our very own Dore Ligula, co-founder and Chief Business Officer at BridgeWise. Also joining us as a special guest, Karen from eToro, who will demonstrate the AI-powered smart portfolio live on the platform. Please drop your questions in the chat anytime, and we'll answer the most interesting ones at the end. So let's get started. So Dor, before we zoom in on the MidCapDiverse portfolio, let's set the stage. From your perspective, how is AI transforming portfolio construction across the industry?
So thank you, Chen. And first, let me thank everyone for joining us today. And of course, Lale and Karen and both of our eToro and BridgeWise marketing teams setting the stage. So thank you for that. And again, now to the question. So let's take a step back, if I may. The AI, let's say, revolution we are now experiencing, I think, demonstrates in the best way how, again, skill sets can be, or skill set gaps can be bridged, okay, from any kind of perspective. You can now, with AI tools, do almost everything, things that you couldn't even imagine doing, especially also both on scale and, of course, on the speed that, you can have things being done now. And if we're taking it specifically to the capital markets, we can very, very easily, I guess, understand how AI can help investors and traders do their portfolio construction and trading and investing better. The capital markets are maybe the most competitive markets, or let's say battlefield across the globe. There is, on one hand, a very again saturated offering of data, both, of course, the more traditional data sets like fundamentals, market data, technical data, news, etc., but also some, again, alternative data sets that you can go through. By definition, the data has to be public in our markets, which is, again, a big advantage. But on the other hand, having such big data sets and data ocean, okay, set some challenges, especially to retail investors who doesn't have the time, the resources, and also the know-how most of the times to go through these data sets. And AI can definitely help them do the analysis, and again, bridge, hence the name BridgeWise, the wisdom gaps while doing the analysis they need to do in order to have a more educated decisions. And again, this is how we both constructed the portfolio, and that's how we believe, again, BridgeWise and naturally eToro can help both of our, let's say, combined clients and users perform better, and again, have more educated decisions while potentially, and I guess we'll cover that in the next couple of minutes, discovering some hidden gems that they might not be discovering or touching on their day-to-day.
Thank you, Dor. Lale, from your perspective, how does eToro see the role of AI in the future of investing? And what are you noticing from investors? Are they excited about these kinds of innovations?
That's a great question. Look, we think that AI is obviously going to continue to play a central role, if you will, in the future of investing, right? So we already see it driving innovation across, say, trading platforms, across research, managing portfolios as well, and also helping investors go through a massive amount of data to uncover patterns and make more smart data-driven decisions, right? So we think that actually over time it will really become a standard tool for both retail and institutional investors. On the retail side, we are seeing obviously clear excitement about it. We noticed that there's a strong interest in AI-related stocks that our clients are investing in, and also thematic investments as well, but also just a general enthusiasm, right, about how AI can enhance the investing experience itself, I would say. And it could be through, say, smarter analytics and more sort of like personalized financial education itself, or it could be about automated portfolio solutions. There is also a clear and healthy curiosity about the risks as well, especially around the ethics, around regulation, and obviously the long-term impact, if you will, on jobs and industries. But overall, we think, and clients would agree with us, that it's really an enabler rather than a replacement. It can really empower retail investors, in our opinion, with better tools. It will not replace the human element, the judgment, the goals, the values, but it remains essential, if you will, in making financial decisions.
If I may jump in for 1 second, and again, following up on what Lale just said, I think both, of course, BridgeWise and myself as one of the, let's say, management, let's say, team members in the leadership of BridgeWise, and I know that the eToro management team is also very much bullish on AI, and I think both of us use the same term, just like, I think it appears under the BridgeWise logo, like investment intelligence. And I know Tony, the CEO of eToro, is also using that term, investment intelligence, also with the recent launch of the chat tool of Tori in the eToro platform. And I think just as Lale says, intelligence, generally speaking, should not replace decision making, but it should definitely help decision making. In the end of the day, the power is in the hands of every, again, trader, investor, client themselves. We cannot take decisions for them. We are not willing to do so. But we definitely want to empower them or help them with, again, better decision making with the best intelligence. And I think that's right for every angle, especially, or every segment or vertical in our lives, especially, again, in capital markets activities.
Very interesting. Thank you both. And now let's turn to the MidCapDiverse Smart Portfolio itself. This portfolio was created together by BridgeWise and eToro to give investors access to a hand-picked group of mid-size US companies with strong growth potential. It's live and available exclusively on the eToro platform, and today we'll take you inside to see what makes it unique. Do, how did this idea come about?
So I think we sat with the eToro team looking at what we can potentially, again, offer the clients with that would be different while helpful to the clients. I guess everyone that is listening to or is joining us today would have the Magnificent Seven, or at least most of it in their portfolios, which is maybe a good decision, especially given the performance of these companies in the last couple of years. But that's an easy thing to do. You should ask yourself why everyone is going to the Magnificent Seven or to the big brands, because of course they are known. Naturally, they are outperforming in the last 2 or 3 years, but it may be that it wouldn't be the case from an alpha perspective, from an overperformance perspective. And it's easy because everyone knows, again, the Nvidias or the Teslas. While, again, some macroeconomic changes that we may, again, cover in the next couple of minutes can create opportunities. And again, what we like to call hidden gems, like with hidden gems that are not necessarily in the Magnificent Seven or even in the S&P 500, which, again, just also as an index or as an ETF, most, I guess, people do have some exposure to. So we thought, or we agreed together, that we can, with the help of AI, and I think that connects to our previous point, enable a kind of a very nice diversification to the portfolios of clients, while again doing the heavy lifting for them, choosing the best in class, potentially based on the AI ratings of BridgeWise, analyzing again some very big data sets across a very wide variety of companies that the vast majority of the retail investors would not have, again, the time, resources, and know-how to cover themselves. And naturally, again, and I think we would cover it, the mid-cap segment, or the, let's say, sub-segment within the market, is a very good opportunity. It's an opportunity to discover the next potential Nvidia or Tesla or Nubank even. I don't know if everyone knows about, again, this is just a specific example. While it's in most cases too big to fall, it's not like a micro cap, okay, that may have some liquidity problems, or you don't know of them. And it's a sweet spot for both innovation and growth potentially. So we agree that, again, both macroeconomic challenges or again opportunities would create some nice growth potential, while again applying AI or leveraging AI to do the things that the end users would not do in most cases themselves.
Makes sense. So MidCapDiverse opens the door to hidden opportunities beyond the usual mega caps, as you said, and gives a chance for investors to catch tomorrow's leaders early. Now let's see how investors can access this portfolio directly inside eToro. I'm pleased to introduce Karen, Smart Portfolio expert at eToro, who will walk us through the platform live.
Hey everyone, can you hear me? Well, yeah, perfect. So my name is Karen, and I'm part of the Smart Portfolio team at eToro, and I'm really happy to be here today with BridgeWise. Let me, before, just a quick explanation, just in case some of you are not familiar with what Smart Portfolio are. So think like investment basket. Instead of buying one stock, you invest in a ready-made collection of assets that follow a specific sector or strategy. The idea is to make investing simple, and there are like three main benefits. First, diversification, of course. Your money is spread across different assets, not just one. Second, professional management. The portfolio are built by our team at eToro or by partners like BridgeWise. And there are no management fees. So today we have over than 120 smart portfolio that cover many areas, like traditional, the classic market strategy. We have some technology portfolio, like the big tech portfolio, for example. We have commodities. We have a Web3 crypto portfolio, and of course the partners, which were created by third party, like BridgeWise. And now let me show you how the MidCapDiverse portfolio looks on the eToro platform. Let me share my screen very quick. We are good?
Yes.
Perfect. So here is eToro platform. 1 second. Okay, now I can see. So a MidCapDiverse Smart Portfolio, it's here on the main discovery. Very proud. Here you can see also popular investors. You can scroll down, and here we have the smart portfolios. So here you can find like our offering, the most trading. We have some commodities, Europe defense, some partners. Here is the most copied portfolio. Here you can click and see the all portfolio that we're offering. And here you can simply type MidCapDiverse. Oh, sorry. Click here, and here's the portfolio page. So on the right side, you can see the number of copiers and the followers. Here's the methodology of BridgeWise midcap allocations. You can click here and see the full bio. The minimum investment is $500. It's really important to say. So here you can see the methodology. You can scroll down. Here is, of course, the performance. You can scroll down. It's a social platform. We have to remember that. You can see here the posts from BridgeWise. Of course, you can write here comments, you can ask questions. Here you have some tools. And here, the stat. The second tab is the stat. So here are the performance. The gray ones, they are the backtest performance, and the green ones are the live performance. So we started to trade the portfolio on May 1st. So here you can see the performance. You can scroll down. You can see here the risk score is 5. Great. And of course, here you have the methodology also. If you are going to portfolio tab, we can find here the asset. We have 30 assets inside the portfolio. You can see the individual stock inside and the performance. You can, of course, get into the specific stock and see the price, etc. And the most important thing, how to invest. So here you have the green invest. So I'm writing here 500. One second. 5. Oh, I don't know. Okay. Great. And click invest. And that's it. I'm investing $500 in MidCapDiverse. And I think that's it. If you have any question, I'm here. Chen, I think.
Yeah. Thank you, Karen. I still see your screen, so this
Oh,
is.
sorry. I'm stuck sharing.
Thank you.
Perfect.
Okay, perfect. After seeing it, let's further dive into this portfolio. So, Dor, can you please explain a bit the methodology behind the MidCapDiverse?
Of course, and I'll be happy to. So let's start with the universe building, because every strategy needs to, again, in order to cherry pick the relevant, again, in that case, stocks or the specific assets that will go into a portfolio, you need to go to the cherry field. So the universe of the stocks, of course, are mid-cap stocks that are between, from a market cap perspective, are between 1 to 50 billion US dollars in market cap. Of course, all are within the eToro tradable universe. So naturally, you cannot trade in exchanges or markets where, again, the eToro platform does not support. So again, any stock that is within the eToro platform from 1 to 50 billion US dollars in market cap, with at least minimum of 10 million US dollars in average daily volume. So because we wanted to keep a liquid portfolio with a trading volume. And from there, we have applied, of course, the BridgeWise algorithms and methodologies. That is, of course, our proprietary models that go through different data sets. I can go into it in a second. And we keep, as Karen has mentioned, the top 30 from more than 4,300 stocks within the platform. So as you can see, we chose not to, again, use 1 or 5 or 10 positions, but 30 was the golden number that we chose, again, together, that would keep, of course, the best in class potentially based on our AI ratings, while having some nice distribution of different positions and quote unquote hedging a specific position that may, of course, create some good momentum, but also some specific, let's say, underperforming stocks that may, if it's too concentrated, it may harm the whole portfolio.
Great. And those 30 companies, sorry, what makes them stand out in terms of the AI? Like, why do the AI recognizes them as the standing out companies?
So as mentioned, BridgeWise goes through different data sets. In that case, 25 years of financial data, and again, things or data sets that are used to analyze stocks. Of course, for that specific segment, after having the universe, we are identifying all algorithmically which specific data points or data features, quote unquote, are the most relevant to this specific universe. And based on these weights, we grade each and every company with a unique distribution for each data set. That again, we give a score to each, let's say, for example, fundamental data set or fundamental, again, or technical data set, okay? And then again, based on these grades for each and every specific financial parameter, and again, the weightings I've just mentioned, we give each company from within the whole universe a full final score with quote unquote a recommendation, a relative recommendation that is aimed to predict, of course, there is no 100% success, but aims to predict what is the likelihood of that stock or company to outperform the others. Okay, so it's all relative analysis, not deterministic, not absolute. But we are willing to predict what would be the likelihood of the outperformance of these stocks, and out of the full list, we choose the top 30, and those are getting into the portfolio.
Very interesting. Thank you. Lale, back to you. We've just heard from Do about how the AI identifies hidden opportunities in mid caps and builds a forward-looking portfolio for eToro's investors. From your perspective, how does the strategy align with eToro's broader vision of making markets more accessible and empowering investors worldwide?
Sure, it fits very well with our vision. Our vision has always been opening global markets to everyone, right? So not just institutional investors, but also retail investors as well. So AI-driven tools are helping us achieve that. So by using AI to uncover opportunities in areas such as mid caps, these are the segments that could be harder for retail investors to navigate. We are actually giving everyday investors access to insights that were previously out of reach. So what again excites us most is that AI doesn't just make things efficient from an investment point of view, but it makes it more inclusive, right? It really levels the playing field, if you will, by bringing more data-driven strategies, by forward-looking strategies to a much more wider audience. And that's exactly what we stand for as eToro, really making sure that we give people tools, education, and access that they need to participate confidently in the financial markets.
Right, this is great, thank you. And Dor, for investors, the investors listening to us now, what would you say should give them the confidence in these recommendations?
That's a very good question. Maybe depends how you look at it. The 100 or $1 billion question, and that's the quote unquote holy grail. So BridgeWise is already in the market for 5 years, and since even more than 5 years. But so since the end of 2019, BridgeWise has been providing this kind of AI-powered recommendations and research or analysis to many different in many different use cases globally. And these are constantly, as shown on the screen, these are constantly proved accurate or right. Of course, there is no 100% in the capital markets, but what we look as, again, consistency and solid, what's called alpha, which is outperformance. So both on, of course, backtest, but even more importantly, on the live results since 2019, we show consistent alpha, of course, of the positive recommendations of the buy of or outperformers compared to the hold and sell recommendations. And again, that is being used by more than 35 million investors already globally. So again, this has been or these recommendations and strategies has been both backtested and proven on live, of course, traction and track record in the last more than 5 years. So of course, again, past performance, as disclaimers say, cannot predict the future, but we see some very nice correlation and even more importantly, causation between the recommendations of ours and our predictions to the actual performance of those best-in-class recommendations or stocks in their portfolio.
Interesting. And thank you. Before I move on to the next question to Lale, I just want to remind everyone that our chat is open for your questions and we will take them shortly. So please write them down. Lale, let's put this into the bigger economic picture. So rate cuts are a huge topic right now. And why are they so important for mid-caps?
Sure, I will share a few slides here. Look, again, overall, as we said before, macro environment is actually quite strong for mid caps, but also small caps. And restart of the Fed cutting cycle is just one aspect of it. So let me walk through a few slides on this. When we look at mid and small caps, we are actually seeing that they are finally breaking through their all-time high after, say, 4 years of waiting, right? We are using Russell 2000 here as benchmark, but I think it's true for the overall mid-cap index as well, that they have been lagging behind the S&P 500 for most of this cycle. And I think that's mostly because of the fact that they have been facing, say, higher borrowing costs and also weaker earnings. So you can see on the chart here that the S&P 500 have been powering ahead since, say, 2020, while mid caps and small caps, they have been more or less in a sideways range. So they have been repeatedly failing to clear resistance. But now they are breaking out, as I said, and history actually suggests that relative performance could continue to tilt toward mid caps in the next few quarters. So if we can move to the next slide, please. Now this one shows how small and mid caps perform right after the Fed starts to deliver rate cuts, right? And it goes all the way back to 1990s and taking a look at all the Fed cutting cycles since then. And how they perform on the day, a week later, and a month later of that rate cut. What stands out for me is that actually small and mid caps consistently perform better than large caps when it comes to, again, performance after the rate cutting cycle is started. For instance, again, we're showing Russell 2000, that's a benchmark here, but they've returned around 5%, while the S&P 500 is closer to 2 to 3% 1 month after the first cut. So you could ask, like, what's the difference and why that whatever like performance dispersion? I would say that, you know, small and mid caps are much more sensitive to interest rates. So these are the companies that really rely on heavily on short-term borrowing to fund their growth. When rates are high, obviously, that debt is going to be expensive and it will eat into profits. Versus when rates fall, financing will get cheaper and therefore earnings can rebound much faster than at large caps, the cash-rich firms. And we have already seen signs of this. As I said, they have been lagging the S&P for years, stuck in the sideways range. But when Powell turned dovish at Jackson Hole, they really got a boost from that. And again, as I said, with borrowing costs coming down, I think these companies may finally have the momentum that they need to break out. Next slide, please. They're also showing real earnings recovery. And I'm here using S&P 600, a higher quality mid-small cap benchmark as to demonstrate how their earnings growth is diverging away from the S&P 500. So notice that their earnings growth is meaningfully accelerating from 2025 onward. And by 2026, actually, their earnings growth is projected to be at faster pace than large caps for the first time in over a decade. And there are a few forces behind this shift. The first one is that their earnings revisions have turned positive. For the first time in years, we're saying that actually more than half of small cap companies are seeing upward earnings revisions. Now, that might not sound exciting, but historically, this measure has actually spent most of its time below 50% since the late 1990s. And any sustained revision about that threshold have usually meant that there will be strong forward performance in the next few years. Next slide, please. Fundamentally, again, financing costs are falling. Again, these smaller companies, as opposed to large companies, large cap companies, they heavily rely on shorter term debt, which makes them, again, vulnerable to higher interest rates. Here I'm showing interest expense as a share of total debt, which has dropped to 6.9%, which is lowest in more than a year. And now, obviously, the market is pricing in, say, 5 additional cuts by the end of 2026. So we think that actually small and mid-cap financing costs could keep easing. And that's really a game changer, in our opinion, for companies that live and die by their cost of capital. The other thing that we need to take account is the fact that policy tailwinds will likely amplify this story, right? We know that this upcoming One Big Beautiful Bill in the US, which will deliver 150 billion tax refund to US households in 2026, that's a direct boost for small and mid-cap firms. These are the firms that depend far more on domestic demand than their mega cap peers, right? So, and in terms of sectors that would likely benefit from that, it will be home builders, it will be banks, consumer discretionary, even R&D driven SMID caps that will stand to benefit the most from this fiscal boost coming from the US. So overall, what we're saying is that mid caps and small caps, they have been long stuck in the shadows, but now they have a good backdrop of improving fundamentals, lighter interest burdens, and policy support lining up. And if those trends actually hold, we are saying that 2026 could mark the first sustained period of mid-cap earnings leadership since the financial crisis.
Thank you. And Dor, when MidCapDiverse was designed, did you have expectations of the rate cuts factor in mind?
I think every investor has some kind of expectations regarding rate cuts because we know what kind of effect it would have on the markets, especially on the equities markets, where again, of course, it would potentially have a strong effect for, let's say, high risk, quote unquote, assets like equities, especially on the mid cap, again, in small caps, as Lale has mentioned, because of the cost of capital and again, the let's say, the strive for alpha or for performance or return or again, yield, depends on how you look at it. So definitely, and I think again, as I said, it's not only the macroeconomics, but also from a diversification and again the quote unquote hidden gem or potential of growth of these companies, not only in the tech industry or the tech sector, but also in other industries. So I think all of the above, quote unquote, made us to together make the decision in creating this portfolio. That would potentially benefit the subscribers or the portfolio, the ones who would decide to allocate at least some of their portfolio or holdings to the mid-cap portfolio we just created.
Perfect, thank you. Up until now, we've seen the power of AI, but let's talk a bit about its limitation as well. Dor, Lale, where do you see the limitations of AI and why does human judgment still matter?
Ladies first.
Okay. Look, it's not infallible. These models are only as good as the data that they've been fed, which means that they can miss context, and they can overfit to past trends, and therefore they might struggle if something out of the ordinary happens, right? And we do know for sure that markets are constantly being influenced by policy shifts, geopolitical uncertainty, or just plain human sentiment, right? And it can't always be quantified neatly in a data set. That's why in this case as well, human oversight is, in our opinion, quite essential. You know, investors bring context, they bring intuition, values, and long-term perspective to the table, which sometimes an algorithm cannot replicate. And as I said before, at eToro, we really see AI as a complement to human decision making, and it's not a replacement. It can help, you know, find hidden opportunities and do the heavy lifting in terms of the analysis itself. But ultimately, it's us as humans that interpret the data, that look at the risks and align decisions with personal goals of our investors.
And I'll take it from here. And again, I think I'll be very I'll connect to what that I just mentioned. And I think, of course, AI is a great tool to use. It of course can identify patterns that the human, and I'm speaking as a human, not as as an AI. That you know the AI can identify patterns that the humans may not. But it shouldn't be taken as a crystal ball. And again, it needs retraining and oversight. And of course, I think the portfolio here, again, having the BridgeWise and the eToro human professionals and experts oversighting the portfolio construction, and of course, letting the AI do the heavy lifting, quote unquote. And that's how it should be made. And again, naturally, I'm biased, but I think that's the right way to do it. And as Lana mentioned, human context is important, and I think this webinar is a good example of how the context is also important to understand why we made the decision to do this portfolio for the clients, and why the mid-cap, again, diversification and opportunity is right, both on timing and generally speaking, not only today or in the coming months. And again, but on the other hand, AI, of course, has some big benefits, and I would maybe address one or of many questions I saw in the chat regarding frequency, for example. So again, in BridgeWise, we analyze all of the data sets literally every day, whether it's 4,300 or 43,000 stocks, okay? We do it literally every day. I think, as far as I remember, the portfolio is being reevaluated once every month, right, Karen? Again, correct me if I'm wrong. But
Every quarter.
every quarter, okay. So once every quarter, the portfolio is being reevaluated, and the positions are being again reevaluated, and we buy and sell some of the positions, some new positions, some of the old ones are going out of the portfolio. But again, the being able to very frequently analyze all of the different data sets and understand the situation of the, especially again, hidden gems and the long tail of the opportunities in the market, is something that I'm afraid only AI can do from a scale perspective.
Very interesting. Thank you both. And we have a lot of questions or has already started hinting for some of them. Please keep them coming in. But now let's start with the first one. Dor, do you want to address the first question?
Specifically regarding the frequency or another one?
Yeah.
Okay, so as I said, again, the frequency of the positions to be going into the portfolio or out is once every quarter, as Karen has mentioned. Again, the BridgeWise analysis is being done every day. And I think there is also a question regarding the parameters or the criteria that are being used. And so, as I mentioned, the vast majority of the data is fundamental data. So going through the earnings and both the earning calls and the earning statements of the companies, but of course, naturally, some, for example, news and technical indicators are going into consideration while again choosing the best in class, the top 30 from the whole universe. And again, I think I wouldn't elaborate too much on it, but you can read further on the methodology explanation in the actual MidCap, and I recommend doing so. I hope that helps.
Thank you. Lale, one for you. As an eToro investor, how should I think about adding MidCapDiverse to my portfolio? Is it more for diversification or for growth?
I think it plays both roles. On one hand, obviously, it adds diversification because these are the companies that are often underrepresented in traditional portfolios that would usually invest in large cap equities, right? On the other hand, we're really trying to capture growth opportunities, again, that might be otherwise overlooked. So if you're a long-term investor, you can think of MidCapDiverse as a really a good way, a neat way to broaden your portfolio beyond just the usual large cap names. So I wouldn't say it's an either or choice. I think it's about both diversification and growth.
Great, thank you. One for Dor. If market conditions change quickly, how does MidCapDiverse stay relevant for investors like me?
Wow, that's a good question. I guess it depends to to what extent the market conditions change. So what are the changes and what are the market conditions? But again, we believe that, and that's why I said the analysis is relative, but not, again, absolute. We don't believe in absolute analyses or deterministic analyses, but more, again, on relative. We want our portfolios to outperform the market or the benchmarks, okay? And not necessarily, again, provide 5 or 10%. Again, it goes both ways. Naturally, if the market would do 10, 20% in the next couple of months, okay, we want the portfolio to outperform them. But if, again, things go south, which I don't hope, and I don't want to believe it goes there, we want, again, still to outperform. And I think that also addresses some of the questions regarding what's the expected ROI or what's the expected performance. So naturally, we cannot give a number, but we do expect the portfolio to outperform the relevant benchmarks. And again, ETFs or indices, given our ability, again, to choose essentially the hidden gems or the best in class from the mid-cap specific segment.
Okay, and another one for you. What factors you adopt for a reevaluate portfolio every quarter?
So as I mentioned, we every month and every quarter we do the same kind of process of taking the whole stock universe that that is relevant to the portfolio and just ranking them from 1 to, again, 4,000 or 4,300 based on the methodology I've just elaborated on. And again, and we choose the top 30, top 35. And again, the eToro team is performing the trading part based on, again, our recommendations. So this is it. Again, the vast majority of the data sets is fundamental. Some technical indicators like moving averages, RSIs, stochastic and then Boolean indicators. But again, this is the basic underlying data that is going into the methodology.
Okay, thank you. Lale, one for you. Why should I consider a portfolio that focuses on mid caps instead of well-known names such as Tesla and Apple?
I think these, well, the first one is the concentration risk, right? So again, Apple and Tesla are great anchors for many investors, but they only tell a part of the story. So these are the companies that often fly under the radar, and they could be very dynamic businesses as well. They're large enough to say have proven track records, but also small enough to deliver meaningful growth. And as I said, the macro environment is just perfect for these types of companies to do that. While on the other hand, the Mac 7 are very rich, very expensive. Concentration risk is there in the overall large cap indices. So I think this is a better risk reward, if you will, for retail investors.
Great, thank you. So thank you, Dor, Lale, and Karen for guiding us through the demo. We showed you all how BridgeWise and eToro came together to create something truly unique for you as investors, the MidCapDiverse Smart Portfolio. We invite you to explore directly on the eToro platform and see how it can fit into your own strategy. Thank you for spending your time with us, and we wish you every success in your investing strategy.
Thank you, everyone.
Thank you.
Thank you.
Bye.